Hi, I'm Melissa Gregg. Welcome to valuationpodcast.com, a podcast and video series about business and valuation and all the things in between. I have the pleasure of interviewing today Jennifer Smith with Murphy Business Brokers, and talking about M&A or mergers and acquisitions, talking about small businesses and valuations. But she really has the pulse on what is happening right now in the US for transactions when somebody goes to sell their business. So tell us a little bit more about you, your business, and your location and all those good things.
Sure. Well, hi, and thank you so much for having me, Melissa. It's great to see you. My name is Jennifer Smith with Murphy Business, and I'm just down the road from Melissa. I'm in Cape Girardeau, Missouri, which is about 100 miles south of Melissa on the Mississippi River. And we help people buy and sell businesses. And there's a lot of activity right now. So I'm absolutely thrilled to be talking with you about this and see what's really going on, boots on the ground.
Well, and I think that's pretty interesting because, things have been changing in the past couple of months. We're kind of in the midst of a crisis, but you're still seeing activity. You're still seeing people buying and selling businesses, which not everybody thinks is actually still happening. So tell me more about like the types of businesses that are still selling and the types of businesses that are having some issues.
Sure, that's a great question. So, yeah, if you just listen to CNN or CNBC or Fox News, you would think that the whole world has come to a grinding halt when it comes to people buying and selling businesses, and things are shifting. It's a little different than it was a couple of months ago, but different is not always bad. It's just different. So, for instance, we're selling a business and closing on it this Friday. And ordinarily that would be a deal that would get banked through a bank. And
what does that mean? What does get banked mean?
That a buyer would go to a bank to get the financing to buy the business.
Okay.
That would be how that would normally happen. But right now, what's happening is the seller is carrying the note on the business. So the seller is going to finance it. And then a bank, once all of the dust has settled, a bank is going to come back in and take out that seller note later.
Oh, that's a good way. Okay.
Right. So if we want to get a deal done right now, and deals are, a little bit more difficult with the volume that the banks are dealing with right now. The banks they're extraordinarily stressed. They are still doing deals, but they're doing very selective deals. And if you're not sure that your deal's one of them, you just got to get a little creative. Let's have the seller carry the note, transfer the ownership of the business. And, when all of the dust settles, we'll have a bank take out the seller note and everybody will be happy.
Oh, I think that's actually a really interesting plan. Now, another thing that you specifically were talking about had to do with the CARES Act and SBA loans. And I hadn't heard about this before. So explain to me a little bit of like what's going on that the SBA is actually trying to help these transactions happen.
Absolutely. So I think there's been so much media attention, Melissa, on all of the PPP and the economic stimulus. One program that the SBA has put in place recently that has not gotten a whole lot of attention, but it really should because it's really going to be helpful, is a program that the SBA is putting together that says that if a buyer buys a business, it has to be an acquisition through the 7A program, which is just the business acquisition program for the SBA. And they make that purchase by September 27th. The SBA will actually make the first 6 months of principal and interest payments on that loan for the buyer.
So they have to do the transaction by September 27th, but then the next 6 months, they can, try to ease through the recovery time period, basically, without the payments.
Yep. And it's not a matter of delaying the payments. It's not a matter of putting the payments on the back end of the note. The SBA is actually going to make the principal and interest payments, reducing the principal of that note over the first 6 months. And that's something that in my career as a business broker, I have not seen the SBA do before. So that's an incredible incentive. Now, keep in mind that the end of September is going to be here in a hurry. And depending on the size and scale and complexity of the business, you have to back into that, right? So we can't decide in the middle of September that we're going to close on a deal at the end of September. You need to be thinking about that now, but it's a tremendous opportunity for buyers to access a really great benefit and get their deal banked by the SBA. So, we want to make sure that buyers know that that's out there to help them buy, and that sellers know that this is a good time to be, continuing to think about your future and what you want your business ownership exit plan to look like.
Because it's not too late to start the sale process. You have several months, but this is going to be, I think, really ideal for those people that were kind of on the fence. Maybe buyers, had approached them. Maybe even as a buyer, they were considering merging their company with somebody, and they just kind of stopped. Well, let's see what the market brings. Things like that. This seems like it would be really helpful for those people that were on the fence, that may have been having discussions or having conversations. And it's a huge incentive. But for this type of situation, what kind of businesses do you think the SBA is really loaning to right now? Are there certain businesses that are still functioning through this recession or downtime?
Yeah. So really what we're seeing is essential businesses, obviously, are going to fare better than non-essential businesses. The non-essential businesses have they've not been operating. They don't have much cash flow right now. There are some mitigating factors that are going to go into that from a valuation standpoint. But what we're seeing getting the most traction in terms of buyer interest are those businesses that are considered recession-proof or pandemic-proof, if you will.
Right.
And I'll give you an example of what I mean by that. We have a roofing company, a very, very well-known, well-established roofing company that we're trying to sell right now. 70% of their work is insurance claims, and we're not going to stop having bad weather because of a pandemic or a recession. So when a buyer looks at that, they say, hey, this is a very well-established roofing company with a fantastic reputation. We're not going to stop having bad weather, which means repairs are going to be necessary and new roofs are going to be necessary. And insurance companies are not going to stop paying just because the homeowner may be furloughed, right?
Right.
So that makes that a very attractive business to sell right now. On the flip side, we sell training companies all over the country. That's one of our core industries, and training companies are really hurting right now because one of the first things to get cut, training, marketing, things like that. And so we're not getting much interest at all in the training companies that we have for sale. Now that will turn around, right? But at this particular moment in time, that's not a super attractive industry. So, I would say it's important to really look at your individual business from a third-party point of view or from a buyer's lens and say, what does my business look like through the lens of a buyer, through the lens of a banker, through the lens of a broker, and what can I do to either make that business more attractive, right? Or to make it a little bit more recession-proof, or what do I need to do to, if you decide that you don't want to ride this wave and see what it looks like on the flip side, what do I need to do today to take advantage of some of these great stimulus programs and programs through the SBA?
Well, and these are things, the interesting things are that some of the things that are making some businesses still successful, and successful may mean a different thing during this time period. still having some cash flow, still being able to make, payments and keep people employed. But some of the things that make them withstand this recession are things that buyers always have looked for.
Sure.
If you have so let's talk about some of those, like contracts with clients that are long term, clean books, or an accountant that is kind of going through your books. But
Yeah.
what are some of the other things that buyers are always interested in when looking at a company?
Yeah. So you hit on two really big ones there, Melissa. Having clean books is really essential. And I would say in the trailing 3 years, they better be really clean. So those last 3 years leading up to the sale. If they're not clean, then you need to have somebody help you clean them up.
Right.
And otherwise, you're just not going to get as much money on the back end.
Well, and let's just do a little clarification, because you and I talk in terms, about business. Clean books really is your financial statements make sense. They tie to your tax return. They, have things allocated in the right place, because a lot of times people will just provide all of their stuff to the accountant, and the accountant cleans up stuff, but they don't clean up the actual underlying data. And so, part of doing a business valuation is putting 5 years of information together. And you do business valuations, we both do. But putting the 5 years of data together so somebody could review, ask questions, what happened here? Why is this $50,000 more in 2000, whatever? But that's really important. And I think that it's overlooked because we're always in this rush to be successful and get more clients. And so during this downtime, it's good to make sure that you understand what your historical financials. So the past 3 years, are banks looking at what's happening now, or they just care about the last 3 years?
So banks, they care about what's happening right now, but they're not weighting it very heavily in their decision making, because everybody knows that this is kind of a one-off scenario. Well, we hope it's a one-off scenario, right?
Right.
And so they're kind of discounting what's happening in 2020, and they're really looking at 17, 18, and 2019.
Okay.
And they're looking at what your outlook is and what your likely recovery is going to look like in 2021. So I don't want to say it's like 2020 isn't happening, because it certainly is happening. And as small business owners, we all feel it, right? And we're all concerned about it. But from a bankability standpoint, or a buyer's discernment standpoint, they're going to put far less weight on 2020, because it's just an anomaly that isn't telling the true story. And, you talk about those clean books, Melissa. I love the way you talk about that, because your financials should tell a story. They should tell a story. And if it's a disjointed story, a buyer gets nervous about that story and buying into it. If it's a very clean and well understood story where things make sense, things are either constant, or they have good explanations, or if there's a dip, there's a good reason why. And it's a story that they can get really comfortable with, that business is easier to sell, and it will sell for a higher multiple. So I love the way you talk about that in terms of having your books make sense and painting a picture or telling a story for somebody that's looking at them.
Well, and it's hard because I really haven't, a lot of times when we do business valuations, we'll talk to the business owner, and their idea of the value may be way up here, and way up here, right? And the books, I think, need to tell the story so that what you expect from a price is close to what your books are saying would be the price, as opposed to so disjointed that you believe, like, and I'm sure you dealt with it. You have a business owner that says, well, it's worth $5 million. And it's like, well, how did you get there? You only are making about 200,000 at the bottom line.
Mhm.
But there's a difference there, which I think in your land is a lot of times I'm looking at fair market value, which
Mhm.
is just somebody off the street comes and buys the business. And there are times where you're looking at strategic value, which is somebody's going to pay more for something. And
Mhm.
everybody reads about these like, oh, this company sold for hundreds of millions and has never made a dollar. But
Mhm.
that's not always the reality. You
That's
usually
why it's
have to
on the
have,
front page.
yeah, exactly. But you usually have to have the story support the price.
Right.
And it can't just be like, this is what I want as the price. Now, but your goal is to help people get to that strategic value, get to, really looking at a higher value because there's some intrinsic synergies, but
Yeah.
that's not always what we can default to, right?
That's exactly right. And you make a good point, Melissa. We both do valuations, but we do very different types of valuations for different reasons.
Right.
I could not play in your sandbox. I send so many people to you because I can't. That's just not what we do, right?
Right.
But as a business broker, what we can do is get really good at one type of valuation, which is what is your business likely to sell for on the open market?
Mm-hmm.
And when we were very careful about tracking our valuations and the expectations that we set for our sellers and the actual sale price. What did it really go for when we sold it? And I'm really proud. Our team here in Cape Girardeau, we are accurate plus or minus 3%.
Hmm. That's
So
really impressive.
I tell my sellers, look, I'm not going to tickle your ears. I'm not going to tell you what you want to hear, and it may not be what you need to sell, but it is going to be accurate in terms of setting expectations for what it's really going to sell for. And if those expectations align with what they can handle in terms of selling their business, then we can very likely sell it for that.
Which I think is a little bit different than some other places that also sell businesses.
Mhm.
Sometimes they're like, okay, this seller wants $5 million. I'm going to go get it no matter what. But they maybe start charging a monthly fee. And then, if everything goes to heck, then they're like, well, you're out the money that you've paid me. I never did sell your company.
Mhm.
And that's not, like I think being very upfront and honest at the beginning, which I
Mhm.
know is what you do. You're like,
Right.
listen, this is what I can sell it for. And if they have an outrageous price, it might not be the right connection because other business brokers could say, let's do it. Let's
Yeah.
give it a try. Let's give it a try isn't I can sell it. It's
Right.
let's see what we can, that's not really the same. But when you're looking at business values right now, do you see a lot of these business valuations dropping, A, and B, um, do you see any transactions? Okay, let's start with that one. Do you see business valuations dropping right now?
At this point in time, I don't see a lot of valuations dropping.
Okay.
What I do see is putting in some protective measures for buyers to help them get more comfortable with doing a deal.
Hmm.
And that could be a little bit more seller financing. That could be the seller staying on to help run the company and transition it just a little bit longer. It could be holding back a little bit of money in escrow at closing and releasing it as things continue to either stay the course or start to recover. Um, I can see a lot of different creative solutions to getting a deal done without just automatically taking a sledgehammer to the purchase price. I don't think that's going to be necessary at this point in time. And what I'm hearing from our banker partners is the same thing, that if we view 2020 as an anomaly, then it really shouldn't greatly impact the price of the deal, right? Because the business is still good. The
Right.
business is still going to make the cash flow in the future that it did in the past. We just have a little bit of a hiccup. And I think that's what the SBA is recognizing with that CARES Act stimulus package is, this is going to be something that's short-lived and short-term, and we need to help people get through it. But it's not indicative that that business is just simply no longer a good business. It's still
It's
a good business.
right. It's the unknown that I
Mhm.
mean, that's what we're all struggling with in general. But you said something that I thought was interesting, and maybe you can give a little light. There is a difference between seller financing and an earnout.
Sure.
And so maybe you can just, because those, earnouts are the only things that sometimes sellers know about, and they don't know all of these other creative ways. So talk a little bit about that.
Sure. So a seller note is essentially the seller becoming the bank, and the seller is going to get repaid on a certain schedule or tied to certain financial metrics. Regardless, they're going to get their money, and it may or may not have an interest rate attached to it. An earnout is something where the money is at risk, and if certain hurdles or financial metrics don't occur, like if revenue drops more than 15% in a given 6-month rolling period, for instance, then part of that money that they paid for the business is actually at risk. And the seller is taking a risk with the buyer that things are going to be okay after they take control of the company. So it comes down to how confident the seller is and how risk averse the buyer is, whether there's a seller note involved, or whether there's an earnout involved, or simply some triggers that take place, some time triggers, where money goes into an escrow account and it gets released in tranches
Hmm.
to the seller, and maybe there's no risk involved. It's just released over time. Um, so there are a lot of different creative ways to get a deal done, and I think we're going to see, the business brokers that can be creative in putting deals together are going to be more successful in this new environment, because we really do have to rely on some different tools than what we've had in the past. And sellers need to have different expectations. They may not get 100% of their purchase price up front at closing in cash.
Right. Well, and I think that one simple difference between, seller financing, you're agreeing to the price and you're just kind of doing a short-term arrangement until you can refinance it with a bank, right? Whereas an earnout,
Okay.
sometimes an
And sometimes
earnout,
the note is permanent. Yeah.
okay. And then sometimes an earnout is like contingent, right? It's not that you've agreed on the amount, but there's going to be something that needs to happen for you to get that money.
Right.
And so those are some of the difference. What about, I know that you said that you don't see a lot of business values dropping right now, but have you seen any buyers and sellers that are in the midst of negotiating, or maybe even done negotiating and moving, towards closing, that are now taking advantage of the situation and saying, yeah, give me a 10% haircut or a 20% haircut?
Yeah, I think that becomes a bigger risk as time goes on,
Okay.
right? As this thing drags out, I think that becomes a bigger risk. Um, am I seeing buyers actively taking advantage of sellers right now just because they can? I'm really not seeing that.
Okay.
But honestly, I tend to deal with people that I like and trust, and whose values kind of more closely align with mine.
Right.
There are a lot of other bad actors in the industry that might attract more of that kind of activity, but I personally don't see a lot of it. At
Yeah.
least, you know.
You're always going to have some people trying to lowball and get
Sure.
something. But, a transaction, when you have a buyer and seller involved, that is kind of the beginnings of a relationship,
Mhm.
and because there's still this transition period. And most of the time, if one starts to do something in bad faith, it's kind of the red flag of what you're going to encounter potentially going forward,
That's
right?
right. That's right. And honestly, if a buyer starts pulling some of that funny business right now, that's going to make a seller really nervous about taking a seller note or an earnout or anything creative, because that buyer is now saying, if I have the opportunity to gig you, I'm going to take it.
Mm-hmm.
And if the seller feels like it's going to come down to how ironclad is the contract because I can't trust this person, it's much more likely that the deal is going to fall apart.
Yeah, talk to me a little bit more, because I think that trust and those types of things are really important in a
Mhm.
transaction, but you're never really guaranteed that anybody, a buyer could come in and say, I'm going to do A, B, and C with your company. I'm going to keep all your employees. I'm going to do everything, but they don't always have to stick with that,
Right.
so there's kind of things change, but
Mhm.
there's also kind of being deceptive, right? And it's
Right.
not always the same.
Yeah, certainly. If somebody bought a business a year ago and they had really good intentions of doing certain things with it, all bets are off right now. We're in a whole different environment, and that buyer, now owner, is going to have to make some difficult decisions that they didn't anticipate. So, running the business in a responsible way and changing with a changing economy and landscape is entirely different than being shady up front and saying whatever it takes to get the deal done, and then not holding true to that. So I think, one of the things that you have to do as a seller, because the seller's typically in the driver's seat, is to align yourself with people who have the same type of values that you do, because that's who's going to attract the kind of buyer and keep out the bad buyers and attract the good buyers,
Mhm.
that are going to make for a successful deal. Because at the end of the day, trust does play a big factor into it. Now, you got to document everything legally, but man, who wants to go to court to enforce a legal document? Wouldn't you rather have somebody buying your company that you feel good about, where you're leaving your employees and your customers and your vendors in really good hands, and that you feel confident in your legacy? I mean, I think that's really, really critical. So finding a business broker, finding a banker, finding a valuation expert, finding a financial planner, an accountant that align with your values, so that they can help make sure that whoever's involved in your deal is on the same page with you, is absolutely critical. And that's one of the reasons why I love what I do. I mean, I just love what I do, because we end up with some of the neatest people that end up being friends at the end of the day. And, it's also a big reason why I will only do a deal as a transaction broker. I don't do sell side deals. I don't do buy side deals, because that puts me in an adversarial relationship with someone in the deal.
Mhm.
And as a transaction broker, if I represent the deal and the buy side wants a good deal and the sell side wants a good deal, then I don't get adversarial with either side. I'm just in charge of getting a good deal done, whatever that looks like to them.
Interesting. Well, and I think that, when people are running their business, they, like, right now, you have successful, not, let's just say you have a successful, thriving business, right? In the normal world.
Right.
Um, you're always, for years, you think it's going to be price. If I can get $10 million and I sell, right? But we know from working in the industry that price, sometimes as you get involved in actually selling your company, may not even be the number one decision factor, you
Right.
know? And so, because talk to me a little bit about that, because I think people get caught up on the price and they don't understand that there is more depth to this transaction, and that there's importance in also what's going to happen to your people, what's going to happen to your legacy,
Mhm.
what does this mean to everybody going forward, that you could have two buyers and one has a higher price, but a deal that's not as good as the other buyer that may have a little bit lower price, but the whole package is good. Do you see that happening a lot?
Yeah, actually, it's more common than you might think. And it's a great problem to have if you've got multiple suitors that want to buy your company, because then it does become far less about price and more about who's going to take care of what you spent your lifetime building.
Mm-hmm.
Who's going to take care of your employees that have, put in blood, sweat, and tears for you all these years? Who's going to take care of your customers that you made promises to? And you may have warranty work out there. You may have service contracts and things like that. Who's going to take care of your legacy so that you can hold your head high and know that what you built is going to be even bigger and better in the future, because someone's going to take what you built and improve on it and make it even better. Nobody wants to sell their business to somebody, cash out, and then have that business owner crash and burn and destroy what they built. I've never met anyone who wants that to happen. So sometimes it does become a little bit less about the money. And that's where the creativity comes in. If a business owner wants to sell, but they're not quite ready to, sit on the beach and drink a Mai Tai, sometimes they will agree to stay on for 2, 3, 5 years as a salesperson or as a team lead or as an R&D person. They'll agree to stay on doing some of the things that they love in their own business that they don't get to do very often as an owner. To add value, they get to maintain their compensation, they get to cash out on their business, and they get to retire while still locking in their sale price. And they kind of get to go along for the ride as the buyer, takes that business to the next level. So, as a seller thinks about what they want their future to look like, talking with people that do this for a living is really helpful, because there's not just one way to do it. And just because your neighbor or somebody on the cover of your local newspaper had a particular structure or multiple ordeal doesn't mean that that's what it has to be for you.
Well, because I think psychologically, having dealt with a fair amount of people that have sold their business, if you are successful in your business, right? And if you love what you do, both of us love what we do,
right,
then you are not really ever thinking that you're going to quit. You're like, I'm going to do this till I die. And that's
right,
what a lot of business owners think. But they also, so normally it's a little bit more of a transition, right?
Mm-hmm.
That it's hard because you're not the boss anymore and you're used to making all the rules. But it's also kind of fun because you get to still do the things that you love. Maybe you only work 3 days a week instead of 5. Maybe you only go to the office for 4 hours a day. It becomes a little bit of a transition so that you start to taste the retirement life and then say, oh, okay, I kind of like this. And then that's why there's such a transition period for a lot of business owners, because psychologically it's necessary. For business, it's necessary. And it is helpful. And that's where I think the relationship with the buyer becomes important. This isn't, you're going to negotiate a deal and we're going to be done the day it closes.
Mm-hmm.
You're going to still continue to hopefully help the new business owner transition. And that's where the relationship and the trust and the morals and the values become really important when they're aligned as a buyer and seller.
That's right. And, at the end of the day, whether it's a 3-month transition or a 3-year transition is negotiable, but you can't sell somebody a business and not teach them how to run it. Right. So there is going to be a transition period there. And your point is very well taken on that, Melissa. You also want to make sure that you don't wait too long, because if you've got a major health concern and your business requires a decent transition period, you may not be able to offer that transition period to a buyer if you've got a health concern looming. So, that whole I'm going to work till I'm dead. We actually see that happening sometimes. And that can adversely affect your family, your estate, your portfolio. It can adversely affect a lot of things because you simply waited too long because you couldn't health-wise build in the kind of transition period that a reasonable buyer would expect. So don't harm your family, harm your legacy, harm your your ability to sell or sell for the price that you should just because you didn't pre-plan well enough, or you didn't start the conversation soon enough.
Mm-hmm. Well, and I think that's why we're in the position that we're in, is that normally it's good to start considering selling your company when you see an upward trajectory and you're kind of either you're consistent profitability or you're increasing profitability. So everybody is kind of stopped because we're in the middle of a crisis. And I think the whole point of us kind of coming together today was to say there are really significant opportunities here to
Mhm.
still exit, to get the SBA to help you with some of the payments,
Mhm.
and that buyers are still looking.
Mhm.
So what kind of industries do you still see that really have active buyers, like the most active? Are they?
Yeah. So
Yeah.
the active buyers are attracted to things that are not going to be greatly affected by a recession, that haven't been terribly affected by the pandemic. Those are the things that we're getting the most traction on. And I would say that the businesses that have strong recurring revenue, and assignable contractual revenue. And when I say assignable, that's really important because if it's not assignable, then we're looking at a stock sale, and that's a whole different kettle of fish.
Right.
Um, but so look at your contracts, make sure they're assignable to a buyer. If you don't have contracts on your deals, you need to start thinking about doing that in this new environment. Recurring revenue, a pest control company, they're on a recurring basis. They hit your credit card every time they come out, right?
Right.
Alarm companies, monthly fees, gyms, things like that, where the money is going to come in, and you might have a temporary hiccup here, but it's going to be a very temporary hiccup, and then their recurring revenue is the spigot's going to get turned back on here shortly.
Sure. So go ahead. Yeah.
So just to the extent that you can do some of those things, that helps make your business a little bit more attractive right now.
If you can transfer some of the revenue to a new buyer is really key.
That's right.
So go ahead.
At the end of the day, a buyer is buying cash flow,
Right.
right? That's what they're buying. They don't, your used equipment, it's a means for cash flow. Your employees, and whatever you make or sell is a means for cash flow. So at the end of the day, that cash flow is what they're buying. And most of the time, buyers are a little more agnostic about what you sell, because they're looking for that cash flow. So keep in mind that's really important, and it might have a little bit of a hiccup right now. But the more you can preserve that cash flow on a very consistent basis, going forward, the more value you're going to see.
And I think even transacting in this time frame, which I know everybody's using this term, it sort of drives some people crazy, but everybody needs to pivot,
Yep.
right? So I think
Mhm.
if you're in a transaction, or you're contemplating a transaction, or you're in any process of that, the more you can show that you not only know your industry, but you also know how you're going to change, right? We're all going to need to change. But do you know your industry well enough to say, hey, I'm changing, and these are some great ideas? And the buyer's like, ooh, those are some good ideas. Like, I want to be a part of that. But I think one of the maybe the final question that we have, which I think is really important for right now, if a seller is kind of thinking, should they wait until business rebounds, the economy recovers, And if not, what do they need to do right now to get ready to sell their company?
Yeah. So I would say it's never a bad time to start the conversation. Every situation, every business is going to be different. And so I can't say, in a very blanket way that now's a good time or later is going to be a good time. But I would say don't shy away from the conversation and go into it with your eyes wide open, with your mind wide open, and find people that are very aligned with you that you can trust to shoot you straight.
Mhm.
We talked a little bit earlier about some bad actors out there. My industry and your industry,
Mhm.
Melissa, are absolutely chock full of bad actors and folks that, they play in our sandbox, but they play pretty dirty, right? You want to make absolutely sure that when you're having those conversations, they're with people that you trust, that are aligned with you, that are going to shoot you straight. And if now really is a good time for you to be selling and having those conversations, they're going to tell you that. And if now is not a good time, that you really do need to wait a little bit and you need to do these 5 things while we're waiting to position yourself better down the road, they're going to tell you that too.
Well, and I think that, okay, so maybe we'll have one more question. But I think that one of the things that I think is actually kind of interesting is that it's it's traditionally not a great time to sell when you need it to be done tomorrow.
Right.
Like, I think that there's some, at the beginning, and I've been telling a lot of clients right now, we're in the middle of a lot of people working from home, or being more accessible than they have been in the past. And
Mhm.
so if you have questions, if you are contemplating it but you don't know what you should do, now is the best time to reach out, because people are having more conversations that are beneficial, because we're kind of, even more availability to have those conversations.
Right.
And the beginning part of the sales process isn't like you put a shingle and you say I'm for sale.
Right.
There's a lot that goes into analyzing your financials, determining your sale price, getting together, do you guys put together some sort of package it's not a promotion, but like a deal book that has to talk about that business. That all has to be created. The buyer list. What are the good buyers? What are the buyers we need to stay away from?
Mhm.
All of this goes into kind of the planning part of selling your company that I really think could get started now. And like you said, if it's not the right time, you've at least created the conversation. You now know more than you did yesterday about what this process looks like.
Right. Right. And I'll tell you, we don't charge for those kind of conversations. I mean, there's absolutely no cost. There's absolutely no obligation involved with any of that. So, if it's not going to cost you anything and you're not committed to anything, why not start the conversation? And the very worst that could happen is you'll walk away from the conversation a little bit more educated, and knowing just a little bit more about what your options look like.
And you start a conversation, because I know that you do this, but you start a conversation and you start it with a third party, right? Because you're kind of this innocent bystander,
Mhm.
and you're basically saying, hey, look at my financials, look at my business, and what do you think? Because I think we're so in our businesses that sometimes we need a perspective outside.
Mhm.
And that's really helpful right now, because you might think the sky is falling, but then you talk to somebody and be like, this business is positioned for the new future. You're going
Mhm.
to be in a completely different realm. And what can you do? But do you guys typically work with people for a few years or a certain period of time? Not typically, but I would say there are times when people might approach you, but then they sell in a year, but you're kind of building up the knowledge that you'll need to really make a great transaction more quickly, probably, than if you just came and say, I need to sell in 3 months,
Yeah,
right?
absolutely. So there's two parts to what we do. There's the business brokerage part, which is the active part of selling a business, and then there's the consulting part of what we do, which is to say that and consulting kind of permeates everything we do in our office because we can't help but be consultative.
Right.
We just can't help ourselves. But with the consulting side of things, if a business owner wants us to walk with them over a period of time, help make those big strategic decisions, figure out how to pivot, when to downsize, when to blow up, when to grow through acquisition, when to grow organically. Those are all things that we can help to do to help position them for sale either now or in the future. And I think that's a real differentiator for us too, is just in our office, the fact that we both consult and broker, and whatever the client needs is what we're going to do.
Because there's things as a business owner that you actively do to make your, to either make your business seem more, like, oh, I'm going to put in a new parking lot because I want my customers to come to a beautiful building, or a this or that we do because we think it's good for the business.
Mm-hmm.
But there's a different way of looking at things that is saying, okay, what is a buyer looking for? And how can you increase those things as opposed to, just doing whatever you want?
Mm-hmm.
And I think that those are important for a buyer, for a seller to know, and start to gear their business decisions around that. Not change how you do business, but just to understand what is going to make you more successful at a sale point, be it tomorrow or next year or 5 years down the road, that they sometimes don't know just generally, right?
That's right. Because they're not thinking about their impending sale on every decision.
Mm-hmm.
I'm thinking about their impending sale on every decision. And it's not that they can't make decisions that are not going to be accretive to the sale price. They just need to know that they're doing it.
Mm-hmm.
Right. And be aware that, that redoing that parking lot is or is not going to help sell the business. Right. Is that going to translate to more sales? Is that going to be important for curb appeal, or is it just going to make you feel good? Right. So, at the end of the day, the business owner can do whatever they want. I'm not running the company, right? But they do need to understand that if they're going to make a substantial capital impact or a major hire, what that looks like to a buyer and what that's going to do to a potential sale price down the road.
That's awesome. So this has been such good information. I really appreciate. Again, Jennifer Smith is with Murphy Business, and they are business brokers in Missouri. And also, we're going to provide all of the information of how to contact her. You heard it here. She is more than willing to talk to you about the process. And, to have a free conversation, I think is worth it, especially when there's so much unknown and you are on the ground actually seeing transactions happen. And I think that that's important knowledge. My name is Melissa Gregg. This is valuationpodcast.com, all things about valuation and business. And I look forward to talking to you again. Thanks,
For having
Jennifer.
me. Great to see you.
All right.